Good evening traders, and welcome to the Traders Corner daily market update for the 8th of December 2010. First of all, I want to start off by apologizing for not being able to put out a market update yesterday. Basically, we got really snowed under. We write for various publications and the due dates are coming up this Friday, so we really had to get the first drafts out and to the publishers so that we can get their feedback ready for the final deadline on Friday. So apologies for that, but coming back to the markets today, not really much in the way of fundamental news out at the moment, or nothing earth-shattering anyway that we really need to talk about. So what we're going to concentrate on today is taking a look at some of the charts and looking at the various technical setups that are presenting themselves or look like they may present themselves in the next few days. So without further ado, let's jump onto the charts and see what we have. Okay, so let's start by taking a look at the dollar yen. Now this pair has been respecting this downwards trend line since pretty much the second quarter of this year. I mean, as you can see here, there's been a couple of bounces back up. Even the intervention back in September time didn't manage to break this trend line, rebounded off of it, and the markets carried on downwards. Recently we had a break of the trend line going back to last month when the Fed finally announced the second round of quantitative easing. It's moved up, it's hit a bit of a resistance up here. The market's gone away again and it's making another attempt at this level. This is a really bullish sign for us. So if we manage to break this level, we're going to be all over this looking to get long the dollar yen. Basically trying to first of all target this resistance area here and then looking at the various forms of resistance on the way up. But we are bullish this pair. If we do manage to get a break, we will be long. Now let's take a look at the euro dollar. This is basically a trade that we've already taken. We got back in this earlier on today. What we had is, if we go to the daily chart, previously we missed the opportunity to get in on the break below this consolidation area here. We had the confirmation of a new downwards trend with lower lows and lower highs being made. And what we did is we drew down into the 4-hour chart, looked at the retracement. We've got a retracement basically up to this previous level of support here, which, as we know, previous support does become resistance. We've got the trend line, which was respected here, here again, and just here. And on top of that, we drew on the Fibonacci retracements and we got the 61.8% retracement level. So as we can see, we've got a confluence of levels here. We've got the right fundamental reasons to be getting in short this pair. We got the breakout of a counter trend line, which we would have drawn in here, as you can see. So if we draw on a counter trend line here, we get the breakout of this. So we were short from around this level here, and we'll be holding this, targeting at least the 130. And if it breaks that, then you never know, it could go much further. So that's the euro dollar. Looking at the pound yen. Now, as I said a few days ago, this particular pair, if you look at it recently, it looks like it's been consolidating. But looking at it from its previous highs, going back to, well, before the financial crisis, the pound yen was basically trading at what, 256 around that area, and now we're all the way down at 132. So if we can get a breakout above this level, now we will play this cautiously, but we get a breakout above this level here that I've got marks in on the charts, then again we're going to be bullish this pair, and we're going to be looking to take a trade initially up to here, see how the market reacts when it gets to the 137 level. If it manages to break through, then we're going to be targeting each and every resistance level on the way up, and you never know, this may be one of those massive trends that we can hold on to for a good couple of thousand pips. But we'll wait and see. Obviously we're not trying to predict the markets, we'll just react when the time comes. Let's take a look through some other charts here. We had a couple of other setups that we were looking at. The EURCAD, again, if we get a break below this level, it could be quite bearish. If we go down into a 4-hour chart, I believe we do get a retracement back to a previous level of support. So if we put in a line here, we'll see that basically the markets came down to this level, bounced off of it, broke through, come back up, bounced off of this same sort of level again, and looks like it's threatening to make another shot down to the downside. So this is something we're going to be looking at as well, though we've already got exposure now against the euro as we're short the euro dollar. So if we do get involved in this pair, we will be more cautious with it in any case. The New Zealand dollar, unfortunately, this just seems to be the pair that we keep missing the opportunities. You know, we can see them there. They make a lot of sense when we see them, but we just keep missing them. So what do we have here? Go into the 4-hour chart. We can see that we started a new downtrend here. We get a trend line which has been respected once and twice there. Draw on the Fibonacci retracements from this particular level here. Let's just bring that up there again. And the market's retraced up to the 61.8, which also happens to be a previous level of support over here and over here. It's bounced off, it's come back down, bounced off again, broken this level, and it looks like there's a great move to the downside, which yet again we miss. It just seems that the New Zealand dollar, we're just never ever going to catch this trade. But in any case, this is just a highlight to you guys, the sorts of trades that you should be looking for. Trades in the direction of the trend, obviously looking for the retracements to get in at a bargain. Finally, let's take a look at the dollar franc, which, as you all know, is something we really do like. We are looking to go long this pair. We were long here. Obviously the market's messed about a little bit. We didn't get the entry that we needed. We've moved the resistance point up to where the market seemed to struggle. If we break out above this point, we're going to be looking to get long. Again, like we said, we at least want to be targeting this sort of consolidation area over here. So there's what, 600 pips in that move, and if we go to the previous high of this year, we've got nearly 1700 pips all the way up there. So offers great risk reward, this particular trade, but we've just got to be there to get in when the opportunity happens. So that's pretty much it for the moment with regards to the charts, and they're the opportunities that we're looking at right now. Obviously there are many other currency pairs, so feel free to apply these sorts of techniques on the other currency pairs. But until tomorrow, you know, I'll just leave you by again mentioning that these videos are for education purposes. We're not trying to give trade signals here in any way whatsoever. We're simply letting you guys know what trades that we're looking at, and it's down to you to then go do your own research, take a look at your charts and see if you agree with our analysis and make your own decision from there. But anyway, have a very good night, have a good evening, and we'll be back speaking again tomorrow. Take care. Thank you.